So usually insure the phone before you buy it or in that moment. So then you're highly susceptible to fraud, but we developed something we call a crack screen detector. So when you become a customer, we ask you to hold your phone in front of a mirror, and then we have a QR code on the screen, and when the front camera can read its own reflection, it will automatically scan the screen for cracks. And you have to do that before you to activate your insurance. And that enables us to have 100% self-service claims handling. So we don't have any claims handlers in Tillit. So after you have gotten your insurance approved, you can we use local workshops. So in Norway we have around 80 workshops now. So if you break your screen, for example, you can just choose a workshop next to you or 100 meters down the street. And they will get a notice that you will come with your phone with this damage and fix it. So it's highly efficient that way. Yeah. And we also we handle the fraud cases up front before you becoming a customer. So Tillit doesn't actually need like any employees at the moment. Like it's just a self-functioning system. So that's pretty cool. And that allows us to take that small margin instead of like the big one. So.
Erik, thank you so much for coming and spending time with us. It's great to meet you.
Yeah, likewise.
Okay, so let's just get started. Tell us a little bit about who you are and what you do.
Yeah, so my name is Erik Skaar, and I'm the co-founder and CEO of an insuretech company called Tillit. So we started up in 2017, or barely started up, but we got our approval from the regulatory government in 2021, so we launched last year.
Okay.
So our first product was mobile insurance or mobile phone insurance. So we have a pretty young audience. Like our median age is 25, and our modus is 20, so it's probably the youngest insurance target of any company out there.
Right. Okay, so tell us a little bit about Tillit's value proposition and what problem is it addressing in the market that perhaps the other insurance companies are not covering?
Yeah, so before I started Tillit, I worked in an insurance company, and there me and a colleague saw that the insurance industry was very inefficient, and that the customers were generally treated quite poorly. So we started thinking about, okay, maybe we could create a digital service that would be much more customer friendly, but we saw that there was a conflict of interest in insurance as a product. So the customer or the company doesn't want the customers to file claims, and that's basically why you buy insurance. So we came up with a model that we call dynamic premiums, which means it's kind of like a mortgage for a house, but when you buy an insurance at Tillit, you can choose between a fixed premium and a dynamic premium. And that dynamic premium can change slightly based on collective claims. So that enables us to price the product much lower due to the fact that we're actually delegating a tiny bit of risk onto all our customers. So if you have 100,000 customers, we can change their premiums within 1 or 2 months if we have priced the product wrong, for example. So that means that like the risk premium can be much lower from our part, and the customer also knows that at Tillit 80% of the premiums goes to actual claims. So if we have a lower claimer loss ratio than 80, then we will lower our premiums the following month. So you can still choose the fixed premium, and that will work like any other insurance company, but usually the dynamic premium is like 25 to 30% cheaper. So it's kind of like spot price on electricity or like floating interest in mortgage.
Right. So with the dynamic rate, I as a user also assume a tiny bit of risk, but that's distributed through all your user base. Yeah.
So in a mobile, so if you buy mobile insurance at Tillit, it will probably cost like 4 or 5 euros, and then it can be like, if you have 4 in April, then in May you might get 4.5 euros or 3.5. for example. So the changes is very minor to each and every customer, but for us as a company, it's major. So,
wow.
And that also opens up for interaction with the customers. So we can start interacting, like we give discounts based on days without claims and different stuff like that. So you can interact with them in a much higher frequency than you would use in a traditional insurance company where you have a renewal every year. So.
Oh, that's really interesting. And what's the proportion of customers that you see taking the
94% have dynamic premium.
94 have dynamic, right?
So if you give them the option to pay €4 or €6, like 94% choose 4.
Right.
So
right.
So that's pretty cool.
It is very interesting. Okay, so I want to talk a little bit about regulation, because we know that insurance and insuretech is one of the most regulated industries, and therefore regulation has always been like a barrier for entry into the industry. So what changes have you seen in the regulatory environment in Norway and the Nordics in general that perhaps are removing or making those barriers to entry a little bit more lax for companies to enter this space?
Yeah, so in insurance, at least in Norway, we haven't seen much change. Like I mentioned in the beginning, we started in 2017 and then launched in 2021.
Yeah.
So we had like 4 years of trying to get there. So so it's quite difficult when you're starting insuretech, because you have to do everything that other startups has to, like raise money and build a team and stuff like that. But then you also have to either become an insurance company or work together with an insurance company. And that usually involves great risk and lower margin that they are used to. So for our part, so we used like 2018 and 2019 to get an insurance partner and an investor. So we have Schibsted as our biggest investor, which is the biggest media company in Norway. And then we used 354 days to get an approval as an agent in Norway.
Right.
So, but I haven't seen that much change. But one thing that might have changed is that we see more like white label insurance companies out there. So, or companies that have a license and that are willing to work with you in a bigger degree. So. Okay. If you go to Tryg or any of the big companies, they will usually not want to work with you. So it's probably easier now due to the fact that you have smaller insurance companies that are willing to work with insuretech.
Yeah, and I would say presumably also it's because you're managing to sell insurance to a demographic that the traditional insurance companies don't really can't really attract, right?
Yeah, but they generally aren't that interested in them either. So I've seen like. The best customer is 50 years old.
Right.
That's like the cream of the crop. So for our part, selling phone insurance to 18, 19-year-olds, that's not necessarily a very attractive case to a traditional insurance company. But we have proven that we do it very profitably, and that the risk with the dynamic premiums is extremely low, because we can just change the premiums if anything is wrong. So, so for our part, one of the reasons choosing like mobile or phone insurance was that it was the product that no insurance company wanted to take. So we tried pitching car insurance to them, and we saw that they're not interested in insuretechs like attacking their golden cow. So, but if you take a product that like phone insurance, where you have a huge amount of fraud and handling the claim manually is not feasible. So for our part, that worked, like going that direction, going after the things that the traditional companies don't like.
And with the dynamic pricing, is that something that you could scale down to other products, perhaps like?
So we're scaling it now. We launched like home insurance now, or renters insurance. So we use it there. We don't have the same claims frequency as you have in phone insurance, so it's not that as efficient, but car insurance, pet insurance, stuff like that, where you have risk profiles that are changing very rapidly, you could absolutely use dynamic premiums in a very exciting way.
Right. Now, tell me a little bit about the challenges that you've experienced in bringing a product to market to perhaps a target market that is traditionally not prone to buying insurance.
Yeah, so we started out with just social media ads, and we saw that that became very expensive. If you're trying to convert someone with an ad to buy insurance, that's extremely expensive.
Right.
So we last year, or in the autumn last year, we launched a referral program, which was very attractive, and we gave away AirPods. So we had to refer 3 or 4 friends.
Yeah.
I think it was 4, and then you get the free pair of AirPods.
Right.
And that went viral. So
Okay.
yeah, so we were number 2 in App Store in Norway, above Spotify and Netflix.
Wow.
For an insurance app, that's pretty insane.
Yeah.
But it became too expensive, so we had to cut it out. But yeah, in January we got more customers than we got in the whole of 2021, based on that referral program. So that's one way to attract the young audience, but it's usually pretty hard. Yeah. So we are also working with embedded insurance now, and trying to embed the renter's insurance into companies that work in the property space.
Right.
So we think embedded insurance is probably more familiar to the younger audience, but it's also a brand thing. So you can. If you brand it the right way, it's much easier to also distribute to the younger customers.
Right. Now, tell me a little bit about how Tillit is using technology to perhaps remove risk out of the whole insurance process, and also improve the claims process and the customer experience overall. Yeah.
So when it comes to mobile insurance, so we're probably one of 2 companies in the world that insure post-purchase phones, or what we call post-purchase phone, also a phone that has been purchased and then insured after that. Usually insure the phone before you buy it, or in that moment. So then you're highly susceptible to fraud. But we developed something we call a crack screen detector. So when you become a customer, we ask you to hold your phone in front of a mirror. And then we have a QR code on the screen, and when the front camera can read its own reflection, it will automatically scan the screen for cracks. And you have to do that before you to activate your insurance. And that enables us to have 100% self-service claims handling. So we don't have any claims handlers in Tillit. So after you have gotten your insurance approved, you can we use local workshops. So in Norway we have around 80 workshops now. So if you break your screen, for example, you can just choose a workshop next to you or 100 meters down the street, and they will get a notice that you will come with your phone with this damage and fix it. So it's highly efficient that way. Yeah. And we also we handle the fraud cases up front before you're becoming a customer. So Tillit doesn't actually need any employees at the moment. It's just a self-functioning system. So that's pretty cool. And that allows us to take that small margin instead of the big one. So
pretty good. Yeah, I would say that's really, really amazing.
Yeah, that's pretty cool.
So tell me a little bit, how did you go about solving that problem using the QR code? Is that something that you develop internally, or? Yeah,
that's something we developed internally. We know that one Chinese company have a patent for it, I think, or kind of. But I'm not sure if I remember how we started. We worked with it for a very long time as a gimmick, because we had a new employee who needed to learn some stuff. So we didn't want to set him on he's a new programmer. So we gave him the task of starting on working with that. So we probably spent almost a year just standing in front of mirrors and just scanning the screens. So that was pretty wild. I think we have 10,000 images of him standing with the screen. But I think we just came up with it and just tried it out. And then we have gradually improved it, so now it works pretty well. So yeah, we read some science reports on companies that detects cracks in concrete bridges. And they use some and they use cameras that like are always filming the bridges and looking for cracks, and they use different filters and stuff like that. So we started applying that to finding cracks in the screen, because depending on the way you hold your phone and stuff like that, it's pretty difficult. And also, it's a whole science with reflection and mirroring things. Yes. Because when you take a picture of a reflection, you will get two pictures above each other slightly. So that can disturb it as well. So it gets pretty nerdy when you start like going deep.
I'm truly blown away. You can probably see it in my face. Yeah. This is really, really cool. Wow.
Yeah, we're really good at mobile phones.
Yeah. Awesome. Now, let's talk a little bit about the opportunities that you see in the market existing from open data. As an insurance company, you probably data is one of the core inputs to how you quote and create policies. How do you think the insurance industry will change as open data becomes more of a mainstream sort of thing?
Yeah, it depends on how it will become open, or if the companies will open up for it. I'm not quite sure how the regulatory situation there is. But we also see a lot of new data using other types of data than the traditional companies have done. So we're using quite a bit of new data on our home or our renters insurance. But that's we haven't launched that 2 months ago, so we haven't gotten enough data to see if it actually has any meaning. But I think that the traditional companies have, like it's not much data that they collect. So why stop with like 5 questions? Why not have 50 questions? Right. And then if you can save the customer money, then he will answer happily. So and just also you can also track interactions, and especially fraud. I think the way you file a claim, for example, if you read how many times you read your insurance papers before you file the claim, for example. So you can track a lot of behavior that way. When it comes to like traditional open data, like we're seeing in like banking, I'm not so sure about it.
Right. When we speak to insurance companies, we hear that very often one of the main challenges that they have, or one of the perceived challenges that their customers have, is the issue of transparency.
Yeah.
So how is Tillit dealing with this whole issue of transparency that has traditionally existed within the industry?
Yeah, so we have something we call, like with the dynamic premiums, we have something we call a 20/80 model, where we use 80% of the premiums on claims. So that's a form of transparency where the customer knows where their money is going. But transparency is very difficult in insurance, because it's pretty much based on the fact that it's not transparent. Right. So yeah, I think the branding-wise, I think the larger insurance companies and everyone in the industry needs to open up. Yeah. I think it's going to be hard to have a valuable brand and also not be transparent on how you price products and where the premiums are actually going, like how much is being paid out back to the customers. So I think we will see more and more transparency. I don't think it's like if you want to have the customer to self-service and do things themselves, they need a certain level of transparency to bother.
Right. Yeah, they need to understand what they're basically
what they're doing.
Okay. Now you mentioned earlier there's some exciting opportunities about using dynamic pricing. Can you tell us a little bit about what we can expect to see from Tillit in the next 2 to 3 years, and whether you're planning to expand the products on which do you apply this type of pricing?
So we're looking at car insurance and pet insurance. Yeah. Those are the 2 products where we're really great at insuring like single objects. So like scaling from mobile phones to cars or pets. It's not that difficult for our part, but So that's the part of the strategy, and also growing in age with the customers. Like now we have very young customers with phone insurance, and with renters insurance we went a bit up. So from 16 to 25 to 20 to 30 maybe. And now with pet and car insurance we are going also a bit up in age. But our plan is working. Like what we have seen now in the insurance or insuretech industry is with Lemonade and Root and Hippo and other companies, is that the valuation has gone down very strongly. So we have a bit quite a steep fall in the valuation. So we have seen that maybe we should focus on cost-effective distribution. So that's something we will be working on now with more and more embedded insurance partnerships. And like we talked about, we have a pretty efficient product. So the product is profitable. And it's also very efficient. So Tillit is in a great place that way. When just scaling up the efficient or the distribution in a decent customer acquisition cost. Because we have seen that companies have paid like many thousands for a customer. And it's getting harder and harder to defend that with the unit economics the way it is. So.
Right. Okay, and then let's just to close the conversation. What would you expect the insurance industry to look like in 2030 once insuretech has actually gone full mainstream?
Yeah, so I think we'll see a lot more transparency in the companies, and I think we will see that companies are focusing more and more on technology, and we'll probably see a consolidation of the insuretech space. Like now we have a lot of different insuretechs in Europe. And I think we'll see that some of them grow and some of them will start buying others. I think like the traditional insurance companies and the incumbents, they have their portfolio, and that's like the one thing that they have that the insuretech doesn't. So it will be really exciting to see the next 10 years to see how that will plan out with the incumbents having all the recurring revenue and the insuretechs having all the customer acquisition cost. And how many of the insuretechs will be able to like go over that top where they start making enough money to be in a great position, because that's when they become a real threat to the incumbents. When they have the portfolio of 500,000 customers or something like that, and with a very efficient system for handling claims and handling customer relations, then it's going to be a problem for the incumbent companies.
Indeed. Well, Erik, thank you so much for spending time with us today. I think it's really fascinating to hear that you're not only innovated on the technology side through things like embedded insurance, etc., but on the product side, actually how do you factor in the risk and the pricing for the products? That's a really compelling, innovative idea. So thanks so much for sharing that with us.
Yeah, cool. Thanks for inviting me.